Hey guys, real quick, I want to talk to you today about the two most important zones on your chart. That's going to be one above and one below. I want to get over the common misconceptions of where to draw either one. We're going to talk a little bit about trading inside of the range and trading outside of the range, but both ways we are going to focus on where that zone is drawn. Write this down. You need to find the correct zone in the correct location. This is going to be crucially important for you to trade. So what we're going to focus on today is understanding why a zone gets drawn below a low or above a high. That's the missing link for a lot of people, especially when they're trading supply and demand, because they do understand what to do when a zone is at its expected spot, but the moment it goes out of that spot, they're not sure what to do. So let me also say, while you're at it, remember to subscribe, like our channel. We've got some awesome information coming in the near future, and you're going to want to stay connected for that. So don't miss out. We're going to announce it here first, right? So let's jump on the charts. That's our YouTube channel. Okay, so let's have a look at the charts right now, right? This is Euro USD. That doesn't really matter. I'm going to go to one of my favorite tools, which is the path tool. And so you'll always see me using this. I find that it's easier to visualize something first than to actually just start trading it. Okay, so most of us would be able to say that this is a clear downtrend, right? Because it's breaking structure to the downside. Now, this is what I want you to do. In order to find the two most powerful zones on your chart, you're going to look for one that is inside of the range and one that is outside of the range. I'm going to show you exactly where to find that. Now, the range is defined by the last high, all right, that breaks a low, or if we were in an uptrend situation such as this, it would be defined by the last low that breaks a high. Okay, so what do I mean by defined? Let's go back to this scenario and a sol scenario at the moment, and let's kind of look at what I actually mean with that. Well, the moment you have a breaker structure like this over here, right? The moment you have a breaker structure, you now have a range in play, And your range will be, and I'm going to use my premium discount tool to mark it out, from that high to that low. Now, ideally, you'd want a 3-candle formation over here, right? 3-candle formation over here. And so one of the zones that you're going to find is going to be the one that's inside of the range. What do we mean by that? Well, we mean inside of this high to that low. This is your first and most powerful zone that you're going to be looking for. Now, when I say zone, do I mean that it's just going to be one zone? Is it possible that there's more than one zone? Of course there is, but we are more so classifying what type of zone we're looking for. And that zone is a internal range zone, inside of the range zone, right? So let's visualize for a moment. That's the kind of zone that you'll find over here. We'll change that color, mark it out to be the supply setup, which is red. And we're going to call that a supply zone, usually at the pinnacle or at the top, right, of a breaker structure, the extreme in this case being down. We're going to find a zone. Now, students know we also teach that there will usually be a zone over here, and in some cases a zone over here. We're not going to talk about that one right now. The one at the bottom is kind of unique to our actual trading style. So these are going to be the 3 zones that you're looking for, but all of these 3 zones fall under one classification, and that classification is its internal range. So what is the actual expectation with this? Well, the expectation is that as price moves back, and we play the retest, right? As it moves back, we're expecting it to break down from one of these areas, right? So we're expecting it to break down and continue in the same direction, as the last breaker structure, over here. Price will usually want to continue in the same direction, and that's called an internal range zone. These are going to be ones that you want to select because they are very, very strong. Write this down. You do not want to take any zone that did not initiate a break of structure. You do not want to take any zone that did not initiate a break of structure. So all three of these zones initiated a break of structure, right? That's going to be your powerful zone number one, which we are calling an internal range zone. Okay, an internal range zone. Then we're going to have another one, and that's going to be an external range zone. So let me clear this for a moment. Just screenshot that if you need to. Try and keep this video as short as possible. Okay, so we're going to have an external range zone. Now, firstly, you're going to still be paying attention to price's direction like that. Okay, and early on what I spoke to you about is what we do when price rises in and how we trade it out. But what if price is over here and you want to move it up, you want to trade it back in, right? If price is over here, let's say this is a higher time frame such as a daily or a weekly, you don't want to wait that long, so you want to trade it back in, and this is what we call an external range zone, and I'm going to show you how to get that one, right? Okay, so what we want to do in this scenario is we still want to establish what the overall trend is. So again, the last breaker structure is down, which means the trend is down, but that does not mean that we can only trade down, right? That's our premium and discount. That does not mean we can only trade down. So this is what we call an external range zone. Usually on the far side of the chart, there will be price action doing this, right? Moving up. I'm going to change the color for you. Moving up all the way, and you're going to look beyond that low for a supporting zone on the left, right? Now, there's going to be something common about the two types of zones. You're about to see it right now. Just give me a second. We'll make that green for a demand zone, right? And so you're going to find a zone on the far left that supports price, and this will give you an opportunity to trade it back in to a premium zone inside of here or inside of here, as we discussed earlier, at which point you can then continue to trade it back out again, right? But what is important, I'm not sure if you spotted it yet, but what is important about the zone on the far left that you're going to use, which we are now classifying as an external range zone. Why external? Well, it's outside, watch this, it's outside of that high over there, right? It's outside of that high that caused that break. It's outside, it's beyond it. The previous zones are inside, in other words, between this area. This one is external, outside of that area. Now, what is important to note here? Well, if this is your zone that you are taking, even if it's external on this formation over here, you still want it to be internal on the other side. Internal, watch this. Internal, that's your break. So this is your low. That's the high that needs to break. And so it's between, look at that. It's between that high and that low. So yes, prices come in here before and has ran away. But there might still be an unmitigated zone over here that price is not yet tapped into, and that's going to be your external range zone. So overall, you are still in a downtrend based on this, but because price is now broken below the low and you do not want to wait all that time for it to make its way up, you can trade it back in based on an external range zone, right? External range. So let me just take off some of these markings. So just to recap, the range is between the high that breaks the low and forms a new low. So it's in this area as I've drawn it over here. And whenever we trade it, we want to trade from an internal range to an external range, right? Now, when we are trading back up into this range over here, that's called a counter trend trade. Why? Because it is counter to the current move on the chart, which is down. Okay, it's a counter trend trade. Once price reaches a point of interest over here, like that, this becomes a pro trend trade on the way down, right? A pro trend trade on the way down. And so that's kind of what you want to do. Find the pro trend move and trade it out. And that's with the trend. The other one on the way up is counter trend. Pro trend is higher probability than counter trend. Now let me show you what are some of the problems I see quite often and what I often see people doing that I think messes up their trading overall. I'm going to clear what I had on the chart and then show you, right? This is what people do. They have a scenario like this and price moves up a little bit like that. And I cannot tell you how many times I see them do this. They draw up a zone over there. That's fine. That's a supply zone, right? And I'm going to show you what catches many people out. And then they draw a breaker structure over there, and that's okay. But then this is what happens. They draw a zone over here as a demand zone, right? And so what price does is go up to their supply zone, and then they get excited because they traded all the way down. And when it hits their demand zone, they want to trade it back up. But the problem is this is internal range in premium, right? And this is nothing. Why is it nothing? Because it did not break structure. It didn't go above that high. Notice that this one broke structure. And oftentimes what will actually happen is price will do that. Write this down for your notes. You do not want to take a zone that did not break structure. You do not want to take a zone that did not break structure. I'll say it again. You do not want to take a zone that did not break structure. This is so important, right? So important. Okay, so let's have a look again on the chart, right? And what do you want to do? If you're going to trade counter trend, in other words, you want to trade price up like that, right? Based on the last breaker structure showing you that it's downtrend. If you want to trade counter trend trading, the best possible thing you can do is wait until price has taken a low like that and is supported by a far zone on the left so that you can trade it back up into the overall range. This is the highest probability, and the reason this works is because price has now taken liquidity below a low and has an incentive to trade back up. So I just want to keep this video short today, but I wanted to speak to you on these two important and most powerful zones. Draw them up again. Number one is the zone that you find inside of the range, right? Even if price is doing a little move like that, the zone that you find inside of the range. And we know there are multiple zones you can find. Ultimately, you want to find ones that are above this 50% mark, right? And the reason that is you want to buy, you want to sell when things are costly, so high in price. You want to sell high and buy low. So this will be an example of a zone that is high in price. And the idea is that as price comes back up, you're going to sell it over there to continue the overall direction that was established by the last breaker structure. And that's an internal to external range trade. If you do, however, want a counter trend trade, right, you're going to do the same thing this time. However, you're going to be looking on the other side of the chart, and I'll change that color again, to find another zone that has broken structure as well, but has not yet been traded to. And since price is now currently in bearish price action over here, the best time to actually counter trend trade would be after price has taken a low, which we have established over here, after price has taken a low, which it has done, and the additional plus it has hit a higher time frame previous zone on the left, which gives us more confluence for a trade back in. This is an external, right? External, and that is an internal range trade. Now, I'm going to give you one last tip on this particular point. When you are trading an internal to external range trade, you can put your targets further. However, when you are trading an external rather to an internal range trade, you want to be taking shorter targets because price is predisposed to continue in the same direction. So I just wanted to share that simple truth with you today. I hope you guys have found tremendous value in it. More such videos coming in the near future. You need to stay connected. Hit that notification bell icon right now. Hit that subscribe button right now if you want to stay connected. We've got some awesome things coming in the near future. Also, check out our description below because there is a limited opportunity for you to join our exclusive free membership. So check that out. Join our exclusive free membership. We've got some great information in there that you guys can learn from. I think you're going to find that no one is delivering or giving this kind of value. We've spent some time building it out, making sure that it over delivers. So check it out. There's no obligation, nothing. Check it out. Just click the link in the description below and get taken over to our website. Very secure. We'll just bless you with some resources. So once again, mindset, multiplication, and management. It's been Coach Chadwin. I trust that you found some value in the session. Please like, comment, and subscribe.